The S&P 500 is on a 5-week losing streak, which has only happened on 2 other occasions since 2008. Down about 8%, and after last week's decline of more than 2%, we're now sitting where the S&P was on August 7th of last year. Amazingly, however, we're still more than 30% above where the market was at its tariff tantrum low from last April. Market declines and recoveries can be easily forgotten in hindsight. That's much harder to do when we're in the middle of a decline. Asian markets were down overnight, with the steepest declines coming from Japan and South Korea. Many countries in that region import a large share of their energy from the Middle East and are therefore much more exposed to spikes in oil prices and disruptions to energy supply chains. All eyes are on Iran again this week. Between the lack of interest in negotiating from Iran and potential further escalation from the Trump administration, the prospect for good news in the short term looks dim. Of course, it rarely pays to react to short-term news and predictions of what will happen next. What does pay off for the long-term investor? Staying invested, focusing on the fundamentals, and keeping in mind the long history of the stock market marching on in the face of bad headlines and unexpected news. Please don't take this as personal investment advice. This is simply intended to keep you updated on what we're thinking about today at Precedent. Have a great week.